Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the latest cues from the D Street. Well, first up, if you look at the benchmark indices, they're up in the green right now as we speak. 17,672 currently for the Nifty 50. About 0.3% of an uptick is what you can spot. The Sensex is back above the 60,000 mark again. 170 points of an uptick can actually be seen for that one as well. In terms of the gainers, you do have some of the banking names really taking the top spot today, with Kotak Mahindra Bank and SBI some of the top gainers on the Nifty pack. Talk about Eicher Motors from the auto space and from the metals pack as well. JSW Steel, some of the other gainers that are up by 2.5% each as well. So it's banks, autos and the metals and slight FMCG counters as well that are up in the momentum in today's trading session. Apart from this, when we look at the laggards, it's the IT pack that is lagging right ahead of the Q4 earnings that begin tomorrow. So you have the big heavyweights like Infosys, TCS all down by 1.5 to 2.5% in trade. HCL Technologies down by 1% as well. Wipro, Tata Motors and Asian Paints, the other counters that are down in the red, but it's definitely a big pressure point getting created in the IT pack in today's trading session. Apart from the banks and the ITs, if you look at the kind of moves that we are seeing in some of the other sectors today, including the realty pack that was up by over 4.5% yesterday, that's picking up some gains, 0.3% of an uptick for that one as well. Apart from that, you have metals that are shining brighter, 0.6% uptick for that one. The autos that are up by 0.5%, financial services, PSU banks, these are the ones that are leading the way in today's trading session as well. But time to welcome our guest on the show. Mr. Vinit Bolinjkar joins in from Ventura Securities, Head of Research. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, our focus on the markets currently is that, tomorrow we see the kick-starting of the Q4 earnings with a big heavyweight IT pack, TCS, Infosys lining up to, report their numbers. First up, your own sense of the kind of expectations that you have from the IT numbers this time around.
Yeah, so after we've seen two, three whammies hitting the US markets, which are the core markets for the IT stocks, notably the interest rate hike, the slowdown in the uh, recessionary trends in the market, and also the inflation in, wages. So
Yeah.
these three are hitting this sector very badly. And after the banking crisis that happened with SVB Bank, and with the pursuant probabilities that some of these banks may not do well, the regional smaller banks, and there could be
Yeah.
consolidation going ahead, we expect that the BFSI spend could slow down quite a bit, and this is going to impact the other verticals also. So we believe that these trends are already in play, and they are going to hit the banks, the IT stocks to a large extent. We expect flat to marginally negative revenue growth from these companies QOQ, and we
Okay.
expect very subdued commentary going ahead for all these stocks.
Right. Let's delve a little deeper. You rightly pointed out that the US and European banking crisis does cast an uncertain gloom this quarter for the IT majors as they begin their earnings tomorrow onwards. And considering that we are in a period of heightened uncertainty, there's a broad divergence also that one is looking at in terms of the reporting of the numbers that could come about this time around. But in your sense, will the March quarter be, the growth in March quarter will be lower than the December quarter at all?
It'll be a mixed bag. Okay, some would report flat growth, some would be negative. And my sense is that we could see some of the stocks with higher multiples like TCS, Coforge, and Persistent, which are trading in very high multiples, 25 plus. They could, bring in a kind of a more of a disappointment. And if you were to look at the lead indicators, you will notice that most of these companies have been delaying onboarding
Yes.
newcomers. And that is clearly telling you that there is a strict control on headcount. Subcontracting rates are under pressure. Their margins are also under pressure. And with, you know, uh, travel also going up. So we are seeing the cost component climb a bit, whereas the revenue trajectory is kind of slowing down. And this is expected to eat into the earnings margins of all the companies across the sector.
Right. Right, you pointed out right as well, and we've been on Business Today TV on top of this story as well, with a kind of delaying in headboard, of the headcount and the freshers is concerned as far as the IT companies are concerned in India as well. And exclusive information on Business Today TV by Akansha Chaturvedi. We've been following up on that story as well. But when we specifically talk about the earnings, I wanted to understand the extent of the impact that could, that we could witness due to the global banking turmoil on the deal wins per se. I mean, the crisis has definitely induced some bit of caution in this entire space. But in your sense, the overall tech spends by the banking clients, what is the likely impact there?
So it is going to be more than marginal. And the reason being that, a lot of these banks have not done their due diligence in terms of playing out likely scenarios. I do not think that they factored in aggressive growth in the interest rates. And, if you see a large number of their clients could go belly up because nobody is able to kind of, pay back their, service their loans.
Hmm.
In addition, if you see money market funds are getting phenomenal traction while bank deposits are kind of scaling back. So that is keeping the climate jittery in the US.
Hmm.
And we believe that there could be a large scope for consolidation over the next 2 to 4 quarters,
Hmm.
in which case the opportunities would be diminished. So that could see growth over the next 2 to 3 quarters take a backseat.
Right. Even in the previous quarter, we did see that retail, high tech, and European concerns were flagged off as the weakest points for most of these IT companies in the previous quarter. Does the weakness continue even in this quarter, and is that something that one should be, keeping a focus on?
Absolutely. I think discretionary, uh, high tech, retail, and banking, which are the major components of the IT companies, are going to take a subdued number going up there.
Right. Now we are also witnessing delays in the deal ramp ups. The sales cycle is getting elongated as well. The revenue conversion is slower. So the question I wanted to ask you is, does the recent correction in the stock price really factor in the moderation in growth as valuations are now close to about 5-year average?
So, what I think is that, my opinion is that we are going to see a pain play out for a longer period of time.
Okay.
It's not going to come back very easily. It's very complicated, the situation, especially given the dollar debacle that we are expected to witness. With the world moving away from, the US dollar, de-dollarization is in full swing. So,
Hmm.
we might have a correction where the dollar appreciates because of a sudden recessionary trend that plays out. But eventually, the dollar is set to decline, and that is going to add to the woes of the IT players. So we would rather use this retracement, upward that we have seen during the market pullback to pair, you know, allocation to the IT sector and divert it more to the domestic regional businesses like retail, like consumption, autos, and Indian banking stocks, which are showing resilient strength.
Okay. Just one last question on the IT pack before I go ahead and ask you your own preferred stocks from this basket, if at all you had to choose. The key thing to notice this quarter will also be the commentary on the guidance going forward. For the entire fiscal year 2024, what is your own sense of the kind of guidance that we can expect from some of these heavyweights?
Exactly, that's what I'm saying. More than the results that they declare this quarter, I think the focus will be on the commentary and the body language.
Yeah.
And I believe these numbers are expected to pare down substantially.
Hmm.
We have seen the same play out in the 2008 crisis, where we had
Yeah.
seen 2 quarters of insignificant, flattish, and recessionary trends. And only thing is, this time it may last a little bit longer.
Okay. And like I pointed out earlier, what is your own pecking order in terms of the IT stocks, if at all one does have to choose for a long period of time? If somebody is a big IT fan as an investor, what would you suggest to them?
Infosys has a stake in ChatGPT, OpenAI, and that is my preferred pick going
Okay.
out there.
Okay, and the kind of expectations that you would have on the target price?
Uh, I think that it will kind of outperform the sagging IT index. So that is
Okay.
if you were to have an exposure to the IT sector, I think Infosys would be my pick.
All right. And overall, speaking about the earnings season, then where are you most bullish on, if not the IT pack? Where exactly can investors really find opportunities to make bigger returns?
So I believe that the retail and consumption sectors have been out of favor in the markets.
Mm-hmm.
So that is one segment that we are quite looks very interesting. We like textile stocks,
Okay.
not with an immediate focus, but I believe that the problems that Pakistan and Bangladesh are facing,
Mm-hmm.
and an aversion to Chinese suppliers, and also Chinese guys are majorly in Vietnam. So I believe that India will gain market share from this. So spinning companies and garmenting stocks are in focus for us.
Mm-hmm.
Apart from this, we like the auto space. We believe that the CV cycle is here to stay. Uh, Tata Motors is one of our favorite stocks that we like in that space. Additionally, we believe that the infra spending is a global theme going out into the next 2 to 3 years,
Hmm.
and this theme is going to catch fancy. And we believe that there are a large number of stocks out here which are very, very undervalued. And we have just recently released the report on KC International, where we think that this stock can do really well from the fact that its margins are expected to kind of double from the current levels.
Okay, understood that. Well, thank you so much, Mr. Bolinjkar, for being with us on the show and discussing all these insights about what to expect from the earnings season and where exactly should one focus on in case IT is on their minds as we see the kickstarting of the earnings going forward from here as well. Let's now move on to see that there's also movement in the crypto asset space as well. The largest cryptocurrency, Bitcoin, has increased, in fact, by a marginal movement. If you can see, about 6.5%. It's what it has moved at, and in fact, it has crossed the $30,000 mark after a long period of time. It is pulling the rest of the market, also of the digital assets, up with it. Data shows the largest cryptocurrency by market cap is currently trading above $30,300, and that's up more than 9% in the last week. And the last time Bitcoin had hit these levels was only on July or June of 9th last year. In fact, almost exactly 10 months ago. And the price of Ethereum, the second largest digital asset, has also increased by 4.3% over the past 24 hours as well, to $1,933 as well. Now, of the top 20 largest digital assets, Bitcoin is by far doing the best as well. Now, this may be partially attributed to the traders' expectations that Federal Reserve Chairman Jerome Powell will reduce the interest rates as a result of the financial crisis as well. My colleague Akansha Chaturvedi now joins in for more details on this. Akansha, good afternoon, and thanks so much for taking the time out for this discussion. Help us understand what's really happening. How does one read into this upward movement in most of these digital assets?
Yes, so Bitcoin reached the key $30,000 level for the first time in the past 10 months. Today, it's up 86% year to date. The cryptocurrency has been adding to its steady gains as investors raised their bets in it, expecting that the US Fed is most likely going to slow down its aggressive monetary tightening coming Friday. Bitcoin peaked at around 30,438. It has gained about 6% since the start of this month, after rising 23% last month. And it's not just the expectation from the US Fed's decision, but the turmoil in the banking crisis, which we had been witnessing for some time now, has also contributed greatly to this rally in the past few weeks. And these are some factors which have been contributing to the rally in Bitcoin's prices.
All right. Well, thank you so much, Akansha, for that update. We'll keep an eye out on Bitcoin and all the other virtual digital assets as well to continue to monitor the kind of that move that we've been seeing right here, and whether this really makes for a case for all the crypto enthusiasts to once again look at this space to really grab this opportunity as to catch this momentum in the digital assets as well. We'll keep you posted with all the expert views as well. But let's get back to the markets for now. 59,984 currently for the Sensex, 130 38 points up. Talk about the Nifty, it's 50 points up at 17,675. That's the momentum that you're seeing, about 0.2, 0.3% of an uptick. So the markets are building up some of the gains. Whether this continues to a sharper build up in the second half of trading action, that's what we will continue to monitor. So do stay tuned with us onto Business Today TV, and also continue to engage with us on our other social media platforms as well to catch all the updates from the world of business and stock markets. Until then, many thanks for tuning in.
Mangalore, Kochi, Trivandrum. So this will be a connectivity between north to south, Kashmir to Kanyakumari. It will be